Hi, good morning, good day. Last day of July 2018. Welcome like every day to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, markets, maybe 1 or 2 questions from your side directly answered on our webinar. Our goal is quick and smart, so let's have a nice start like every day. And like every day, we will start with our risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account to make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. This is me. My name is Jens. I'm the German guy from Admiral Markets. We have over 18 country offices. We are big international Forex and CFD brokers, so my English is made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, like today, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And on Friday, it's Dirk's day. Our leading day traders live every business day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, one of our bestseller DAX 30 CFD, typical spread of just 0.8 points during the main trading hours. You can trade mini lots and you can choose the leverage. If you're a professional client, if you're a retail client, the maximum leverage for Forex will be 30 and for index CFDs will be 20. It starts in that week, so we are having many information about the ESMA regulation on our webpage. Check it out on admiralmarkets.com. There you'll find also something about our regulatory background and how to contact us. You can call us, you can send us email and ask all your questions you might have, also about the ESMA changing of the regulation. It's one of the topics of the year. So as a professional client for DAX 30, you'll get maximum leverage of 20, for Euro dollar, maximum leverage of 30. But if you are a professional trader, and you have lots of experience, you can apply for getting the professional client status. You will get many benefits. For example, choosable leverage up to 500, but also maybe a disadvantage. Only a retail client will have unlimited protection against negative balances. Professional clients will get a negative balance protection policy at Admiral Markets up to 50,000 British pounds. But not all brokers offer that. So if you like to apply for professional client status, check out which broker you're doing it, because not every broker like Admiral Markets have an additional protection. All about that in the link, what you see here, check it out on admiralmarkets.com. And here again, how to contact us, all your questions, call us, send us email, whatever you like to do, everything to find, of course, on admiralmarkets.com. Enough from my side. Now it's time for our day trader of today. Hi, good morning, Paul. And again, if you have questions or if you have a market we should watch to it, just use the time live in the webinar and type it down, and we are happy to answer all your questions. Now, Paul, what's your view to the markets today?
Good morning, Jens. Good morning, everybody. Thank you for the introduction. I hope that you can all hear my voice. I hope you can all see my screens there as they're just showing up for you. Yes, as Jens said, here we are, 31st of July already. Okay, so it's we have an interesting week in terms of, we've got an end of month here today. That means we have a bit of a week of some cracking sort of news announcements that have been coming out already today and for the remainder of the week, and so I am expecting a rather interesting and volatile week as we kind of almost sort of run down the clock towards summer holidays. I expect this week will be probably pretty full on, pretty busy, and then after that, of course, the main traders, the main fund managers, they'll be retiring for their summer holidays. They'll be all off to their yachts to the south of France, okay, to enjoy a little bit of R&R there. I'm still waiting for my invite to those parties, but in the meantime, there'll be plenty of us to do work for us to do with the actual market and with trades that are coming our way. So it's a little bit of a watch and shoot week, okay, ladies and gentlemen. For those of you who are new, it's literally a case of there's going to be opportunities there for us, but we just need to sort of have a little bit of patience and sort of have a plan and wait and see as those opportunities unveil themselves to us. So I thought there's a couple of things I wanted to talk about today. There's sort of, the main one to talk about really to start with is Japanese yen. Here we are on the MetaTrader 4 Supreme Edition from Admiral here. You can see I have a yen profile here set up. So as always, I have, Euro yen, dollar yen, pound yen, Swiss yen, the Aussie yen, Kiwi yen, CAD and then the Nikkei there as well. So in a quick glance, I have a real snapshot of what is going on with Japanese yen and to a little bit of an extent the Japanese economy. So hopefully you can see that these are the hourly charts I've got them set up on, and actually we can see that what's been happening is all those charts are rising, which invariably means that Japanese yen has been getting sold off this morning. Why has that been happening? Well, overnight we had the Bank of Japan Bank of Japan policy meeting. The interest rates remain unchanged, and whilst there was a little bit of talk about, let's call it more like a tweak, some very small tweaks to what they're doing, overall their policy has remained unchanged. People had been discussing that there might have been a policy change announced by Bank of Japan. So invariably, when that didn't happen, it's not unsurprising that the Japanese yen got sold off there. Okay, and that's what we're seeing there. Excuse me. That's what we're seeing there. I was looking to see, perhaps there might be an opportunity for a pullback as part of the news. But we've not had that there this morning. It's really once this the news has filtered down into the let's call it onto the trading desks, as the European trading desks have opened, then invariably what we have just seen is that there's been a sell-off in yen. So if you were short yen, then you've done very well, and congratulations. For the rest of us, it'll be a little bit of a case of of watch and shoot. And one of the flip sides of that is the Nikkei here. I wanted to have a quick look, namely this is once again it's the hourly chart. If I just zoom in, we're looking at around this 22,500. Okay, 22,500 has been a zone of support and resistance, and hopefully what you can see there this morning is that actually on the Nikkei, as that news has been announced, we can see that it's actually been really rather volatile there this morning. And what I suggest to traders is that when you start seeing the volatility, then it's very tempting to want to just mash the keys and launch a position, but invariably it's a little bit about allowing the dust to settle, waiting to see what the big players make their decision upon what they believe is the likely outcome for the Nikkei, and then be able to trade in line with that. We've seen the Japanese yen sell off, so invariably what in the old QE days, what we would normally see is that as whatever was good for whatever was bad for the currency would be good for the index, and so we may well see a little bit of strengthening in the Nikkei over the next few hours and in towards this evening session. So I'd be just suggesting just to keep an eye on that. If we can keep above that 22,500 level, then we maybe see a breakout above that 30-minute 200 period moving average, break up and hold above it. Well, then that might be an opportunity to take some long positions in the Nikkei. So it's a case of, as I said, a little bit of a case of watch and shoot and see how that plays out. But definitely the yen, well, the yen has just been sold off, and the yen has been pretty strong. It's been in the top 2 or 3 of the let's call it like the majors strength index, and so what we've seen is that with that sell-off, I expect to see that drop away over the next few weeks, and that will have an opportunity with 1 or 2 of the new currencies coming through, like Swiss and Canadian yen, Swiss franc and Canadian dollar. And what we'll do is we'll look at them maybe a little bit later in this session, or if not, in our session next Tuesday. So that's the yen, but what I wanted to have a look at, something a bit different for us, just based upon the news that we're seeing at the present moment. So what I want to have a little look at, we've had a little bit of an index, and I want to have a look at the index in general, but one in particular because it's been driven by what we've seen in the news recently. Okay, you wouldn't need to be much of a hermit, okay, to actually not have come across what we've seen in terms of some of the tech companies in the US, and in particular how they have played out. So here we have, a chart of Facebook. So for those of you who are new, those of you joining us for first time, my charts are pretty simple. I have green bullish candles, red bearish candles, I have a blue 20 simple moving average, a red 50 simple moving average, and a green 200 simple moving average. I also use fractals here, which are the little triangles above and beyond, above and below the charts. If you want to find them, you can find them under Indicators Bill William Fractals. Okay, so there we have this is the Facebook daily chart again. It's pretty clear that was in a lovely uptrend. Okay, lovely uptrend, and I'm sure there's lots of people who are enormously happy there, being long Facebook until last week. Okay, until last week, where we effectively had news come out, post earnings and news came out, sort of post close, and what we saw there was effectively, I think it was about a 19% drop there in Facebook, which I understand. Stock market historians may know it better than me, but I understand that's kind of the biggest drop in a day for any particular stock, and so not surprising, that causes a lot of consternation, that draws a lot of media attention, and we can see that has carried on, and then invariably we saw, over the next couple of days, over sort of Friday and yesterday, we saw a little bit of that selling continue. Yes, there was a little bit of a on the hourly chart, maybe a little bit of a rally towards the end of it, but for those of you who are considering, for those of you who are investors in Facebook, an investor might see that as an opportunity to buy. As a trader, I don't. I'm looking at to sort of see, let the market play its hand. Will it rally up a little bit before it rolls over again? Well, that's possible, and I'm looking at, well, how can that have an impact on other particular stocks and also on the actual index itself? So that was Facebook, but it's sort of had a knock-on effect there. If we look at Twitter, here we go. Here's the Twitter daily chart. Once again, it's been in a nice uptrend recently. Twitter's not been as Twitter's had a bit more of an interesting journey than Facebook. But what we saw here on the daily chart was price was rallied up. Price has gone into almost like a consolidation flag there, and I think a lot of people would have been waiting maybe for the breakout to the north and the continuation of the uptrend. But actually, what we saw was something quite different. Once again, Twitter's earnings were less than expectations, less than the market was going to be excited about. And off the back of the Facebook news, we also had really quite a strong sell-off there on Twitter. My own view, okay, and this is purely Paul's trader view, is that I suspect that what's going to happen is that the behavior of social media companies is catching up with them. That actually probably what we've seen is a lot of insiders dumping their particular stock. There's also rumors of the SEC having a look at insider trading going on, and certainly in the sort of Facebook stock, in terms of Mark Zuckerberg and other individuals sort of dumping their stock early, which has probably maybe helped to account for these kind of really rather sort of strong, almost kind of cliff edge drops we've seen in those particular indexes, so particular stocks, my apologies. So with Twitter, once again, I'll be looking to see, will it come back up and kiss this trend line? Okay, that's what I'll be looking at. Will it kiss the trend line? And if it shows that it doesn't have the sort of strength to get back up above it and fill that gap, well then I'd be looking, if there's bearish price action, then I'd be looking for a particular rollover there. And that story has sort of come through quite a lot of those tech stocks. We talked all of last year and the start of this year about the FANGs, okay? The FANGs being the super stocks, that everyone was talking about, in terms of, Facebook and Apple and Netflix and Google. And here is Netflix itself. Netflix put in a really lovely double top there, okay, a few weeks ago. But even we can see Netflix, okay, Netflix has been rolling off its top there, right? That in itself is pretty bearish, and I'd be looking to see, could that actually sort of drop its way down towards around about that 300 level, whereby the daily 200 period moving average would be coming. So we can see that that's had a strong sell-off, and as I said, I think that tech bubble is, there's definitely a lot of steam coming out of it, shall we say. Same for Google on the daily chart here. I'm going to go down to the 4 hour. Okay, nice uptrend, but end of last week. Okay, all of this action on these tech companies is having a knock-on effect, and we can see a little bit of a rollover there. And so, I'm expecting Google to maybe hold up a little bit stronger than certainly Facebook and Twitter. But once again, it's a case of as people start to get a little bit worried about it, then invariably what we start to see is we start to see selling across the board. So as I said, well, that brings us to having a look at the actual index. So let's have a look at the Nasdaq itself. Here's the weekly chart. So if I zoom in, okay, in fact, no, I'm going to zoom out for a bit, because listen, you can look at that chart. That chart has been, for the last couple of years, all right, has been a really nice uptrend. Yes, we had a little bit of a correction here earlier on this year. Okay, we had a really good correction. Okay, but interestingly, even though that correction, we still pushed to the north side. We still broke to new all-time highs, which I have to say I found strange, based upon the sort of, let's say, the news that was coming out about Facebook and some of their shenanigans with Cambridge Analytica. The fact that Facebook and Nasdaq were still pushing to all-time highs was rather interesting, and so maybe in hindsight, with ever glorious hindsight, we'll be able to look back and say that was just the kind of the last pump before it rolled over and fell. But we can see here that the Nasdaq here of the last couple of sessions, it's been a pretty strong sell-off there, hasn't it? This is a 4-hour chart. We had a real big rejection candle, gap down. It tried to come up, fill the gap, and then it rolled over and fell away. Okay, and so here's one of my other kind of watch and shoot sort of trade ideas for the rest of this week. Is I'd like to see Nasdaq sitting there around about 7,200 at the moment. We'll see how it opens later on today. But what I'd like to see maybe is would like to see sort of Nasdaq rallying up to around about that kind of 7,270, 7,300 area. Okay, just back up towards that zone there. Okay, just a little rally there, and then I'll be sort of, as I say, watching shooting. If a price gets up into around about that area, 72.70 around there, and then I start to get bearish price action. If I start to see price, giving me sort of bearish signals, that's signaling, effectively another lower high, well, then that would be an opportunity for me to sort of to take a short in the Nasdaq on a swing basis, and invariably I'll be looking there around about sort of 72.70 zone area based on the price action, but then running down towards around about that 70.50, okay, towards 70.50 to 7,000 zone there. We've got some bullish order blocks, we've got some support levels there, and that would make for a nice trade. So I'd be keeping an eye on that over the next couple of sessions. Just keep a touch upon that to see how that plays out. Okay, and the one of the great tools, or upon the Admiral MetaTrader 4 Supreme Edition, is that you have access to those major American stocks. So you can either trade them if you're a stock trader, or you can use them as a gauge of what we think might be the likely price action in the Nasdaq itself. So keep an eye on that. So before I take any questions, I'm just going to do a little bit of the sort of usual sort of almost like housekeeping, you'd say, in terms of looking at a few of the regulars that I know that our our clients and our attendees to the session are always interested and are always actively trading. So let's get this on. Dollar index, okay, very, very quickly. Okay, daily chart. I see it here now. It's formed another sort of lower high here. Okay, after pushing to highs here last week. Let's put the cursor on. Pushed to high last week. It's rolled over a bit. The 50 acted as some dynamic support there, but we've rolled over again, and we're here again. And I think we're at a little bit of a sort of an inflection point here. Okay, will that support line, will that 50 period moving average provide support that would push it back up towards that 95 zone, or are we going to have a little bit of a rollover? Okay, will we have that rollover that I thought we might have, and then a little bit of a as we run into August, maybe a little bit of a drift down towards the kind of 92.50, 92 area? That's what I'm considering. But of course, I trade what I see. So we just keep an eye on that. What we can do is look at it, how's that inflecting upon the euro against the US dollar on the daily chart. So here we are, daily chart. We can see that lovely move down. You've heard me talk about this, for months, about it, coiling up, building up, and and if I go down, okay, if I zoom in, starting to see, we drew in this sort of trend line here last week. Okay, we're into a sort of a triangle. It's it's a squeeze going on. Price is coiling up before it moves, and we can actually see that it's getting up towards there, and it has done there this morning. If I go down the charts, okay, start to look down the time frames, I'll start to look at, okay, what's going on here? Okay, we're having a little prices hit that level there. what we're looking at is, on the sort of hourly chart. Okay, the price action is a little bit scruffy for my liking, but I'm keen and interested to know what the likelihood is of our trade opportunities. If I'm looking at here on the 15-minute chart, clearly it's hit that level above there, okay, the sort of 1730, okay, level of resistance. We've had the sort of sloping trend line. It's putting in there a little bit of a scruffy double top there, okay, a bit of a scruffy double top. I'd be calling that, ladies and gentlemen. So what I'd be looking at is, if this had performed like a very clean 1, 2, 3 pattern, okay, then I might have been looking to sort of take a trade in that. At the moment, I look at that as, that's quite scruffy, okay. That's it's quite scruffy. The price action there isn't really exciting me, if I'm honest. When I look at it there. So what I do is, I just have to wait and start to build a plan, okay. When I look at the 30-minute chart there, okay, there's nothing really there to excite me. But what I do is say, well, okay, what I need to see is, if we are going to see dollar weakness and euro strength, well then, I want to see it breaking out, above that trend line, above that 1730 level. So my trade plan becomes, if price breaks above and holds above that 1730 level, well then actually, I'm looking to be a breakout trade, and I'd looking to be long euro and short the dollar. Alternatively, if we start to see that, price actually sort of, starts to roll off the top here, then invariably, we've run out of energy on this move. Well, then, for an intraday trader, then there might be the opportunity to sort of take a couple of short, sharp, sort of short euro dollar trades back towards the sort of 1700 level. We can see that there's a good degree of support there around there, just in front of the sort of 117 sort of big round number. So, I'd be just, once again, let's say, just watch and shoot on that opportunity. So if we have any time, Jens, I'll happily take a question if we've got one or two, if we've got time for that.
I guess for today, the time is our limit. We are done. Tomorrow is another day. So we have 5 days a week, 5 different traders, and 15-20 minutes is our goal. So thanks to Paul today. If you'd like to see that again, a couple of hours later, it will be available on our YouTube channel. So visit YouTube channel or visit us tomorrow, same time again. Greetings from Berlin office. Thanks to Paul. Bye-bye.
Bye, everybody.